Hi, this is Paul Smith from Globe Metals and Mining. Globe is a ASX listed junior developing a globally significant and integrated niobium and tantalum mine in Malawi in Africa. I think this is really an exciting project. It is probably the first emerging and fully integrated niobium operation under development since 50 years. The aim is to be the second vertically integrated producer in the world after the key producer in Brazil. Um, the Kaneka project is very well advanced. It's fully authorized. It has its mining right, its mine development agreement with government, and essentially is ready or shovel ready. The country of Malawi is really fantastic to work in. Government, we find, is always 100% supportive, great community to work with. And I think it's quite an honor to be able to develop this project in Malawi, which is not a well-known mining destination, which actually can be quite a positive factor. Niobium is critical. It's classed as a critical metal, transition metal in Europe, in the US, Japan, India, and Australia, given its key uses in specialty steels, electronics, medical application, and so on. So that obviously has transposed into firm and we believe sustained firmness in the price going forward. I think you all know where Malawi is, Central East Africa, bordered by Mozambique and Zambia, essentially, and is around 700 kilometers from the nearest port in Kala in Mozambique, although a port is really not critical for us, as I'll talk about shortly. In terms of the overall economics of the project very well advanced. It's post BFS. It has a compliant resource and reserve statement of significant size with a 27-year mine life at full production. The metrics in terms of the economics are still very robust, with over 35% IRR and NPV over or close to $900 million. We're going to develop this project in two phases, essentially to de-risk the project. First phase is small, it's only 10% of full production. That has a capital cost of $46 million, which we believe is totally achievable from a capital raising perspective, and will be done in a manner to minimize dilution, as we'll make significant use of senior debt, convertible debt, as well as off-take financing. The overall gross margin in terms of the total project in phase one and phase two is over 60%. And that's really symptomatic of a very low cost base and sustained high prices. We do plan to build this project in a fully integrated manner, as mentioned. So that is mining, which is open cast strip mining. Overall strip ratio over life of mine is less than 1 times because it's at surface. Very little to no overburden. Oxide flotation, which has been demonstrated, pretty good recoveries, well north of 70%. And then taking a concentrate into an HFSX refinery that will be built within a sister company of ours on site to produce a very high quality niobium and separate tantalum concentrate of pentoxides, which will be sold into the OEM market and not through traders. Strong team, Very strong team and growing. We've just appointed a key mining engineer, but myself, a Rex, Chief Technical Officer, very experienced chemical engineer, Charles Asuta, is obviously key in terms of our finance director, Paul Hardy, and a full team of technical guys, which has simply been augmented recently with our mining engineer to take the project essentially into development. So, in terms of its unique positioning, in terms of Globe, low cost mining, low cost of mining, we're looking at about $18,000 per ton mining of per ton of niobium pentoxide, where the current price of niobium pentoxide is around $56,000 per ton. JORC compliant resource and significant efficient concentration, well-known refining technology. It is very well known, and we just want to be safe in terms of operating risk. And then offtake. So we've secured one key offtaker in Philips, which we are developing that relationship, and we have two further relationships under discussion that will ensure that our offtake for phase one is fully committed, both tantalum and niobium pentoxides. Malawi, as I mentioned, great country to work in. It's fully democratic. It's never had a civil war, stable and growing. Yes, it is one of the poorer countries in the world, but has a great future under great leadership. So we really do looking forward to working with our community and stakeholders in Malawi. HF process, I won't dwell on, but very well known and understood. One of the key reasons going the HF route is quality of product and ensuring the absolute purity of our oxides. So optical grade oxides is 99.98% pure pentoxide. So one understands the critical nature of the purity that is required to achieve the prices we intend to sell at. Overall, optimization of the project has taken place, although we are undertaking a quick BFS update that will be finalized in the first quarter of next year. And that is just to validate phase one and phase two economics under current circumstances. And then we would go into capital development second quarter next year. The niobium market, yes, it's dominated by ferroniobium. Around 90% of the global use of niobium is as a ferroniobium and dominated by specialty alloys of steel. We are not in that market. We are not going to compete with the major producers in the world. We are really focusing in on the pentoxide market, the electronics market, the optics market, and certain applications for certain specialty steels that require an oxide. So that is our focus for this project. And we believe that market is, in fact, one of the fastest growing markets for niobium in the world, in excess of 20% growth per annum, believe it or not. And that's the area we're focusing in on. We do have offtake, as I said, one signed. Our focus is offtake to Western markets, focus being North America, predominantly Europe and Japan. Prices have remained firm, which is great. Yes, that is a commodity at the end of the day, so there will always be some volatility in price, but we're still seeing very firm prices, which is great. And just to put this into context, relative to copper, niobium is 5 times more valuable, 5 to 6 times more valuable. So if you translate that into equivalent grade on site, obviously it leads to great economics for the project. Way forward and milestones for the project. We are finalizing offtake agreements as we speak. We'll complete an updated BFS, which is based on a DFS. So all the heavy lifting is kind of done. Hopefully board approval end of first quarter 2025 and going to first phase development thereafter. It is a very small operation. It's a pilot phase. So we do see commissioning early in 2026 and then probably second quarter into production. The second phase commissioning, we are planning for Q2 28, obviously well after steady state operations of phase one and the completion of the updated BFS for that at that point in time. And that's the big project that we're ultimately aiming for. Just an overall schedule of what I've just discussed. So 2025 for us, a big year, basically taking the project into development and construction with early production Q1 2026. In terms of funding, I think we are almost there in terms of funding. We have senior debt committed. We have a very important infrastructure development fund focused on Africa, coming to the table with a very exciting and viable convertible option of significant further funding. And then we are in discussions to finalize equity raise for the balance, which would see minimal dilution in terms of phasing. So yes, we are tranching the funding. It's made up of senior debt, convertible debt, and equity. So that's it, guys. That's basically the exciting story for Globe, going into a challenging but very exciting phase of development. And it's been a long time coming, and we're great to have the opportunity to take this project into development. Thank you very much.